Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here from Boston, where we are talking diamonds today with my guest. Cormac Kinney is the CEO of Diamond Standard. Cormac, welcome to the show.
Thank you. Great to be here with you.
Yeah, well, so much to cover here. I'm curious to learn about diamonds because with a 1.2 trillion market value, diamonds haven't had their own regulated asset, haven't been a regulated asset until now.
Well, we launched these, which are a Diamond Standard coin and a Diamond Standard bar. These are a spot commodity. So like gold, you have a 400-ounce bar that trades on the CME as a futures contract. This is the good for delivery bar for diamonds, which means for the very first time, you and I can invest in diamonds the same way we invest in all other precious metals.
So completely groundbreaking, and in fact, you've brought me trays of diamonds. We are holding up over, what is it, over $1 million here worth of diamonds, right?
Each coin is 5,700. Each bar is 57,000. But we don't set the price. It's just like gold, the market. I wake up every day and find out what these are worth.
So if I call in, I could buy these bars and coins directly, and then they're stored where?
It's up to you.
Do I take physical delivery?
About 1 out of 20 clients does take delivery, but most of our clients take delivery in Delaware because there's no sales tax.
Hold on a second, there's a huge opportunity here. Walk me through that moment for you.
The problem with diamonds is that every diamond's different, and no one could ever mark to market a diamond because there's no price transparency. There's no price discovery. And so the solution, which was covered in the Wall Street Journal today, is we force the market to tell us what every diamond is worth because we buy 10,000 diamonds a week through a bidding mechanism, and we buy a statistically valid sample of all the world's diamonds to put them into these coins and bars. So every bar is equal because the diamonds always add up to a public standard. We think that investors will buy about 15% of all the world's diamonds because that's how much platinum they hold, for example, 15%.
Why do you think this wasn't regulated? I mean, it's a 1.2 trillion,
1.2 trillion,
right? In a massive market. Why didn't anyone think of this before? Like, why wasn't there a spot diamond price?
It really took an outsider. And my background is computer science. I have 3 degrees from Carnegie Mellon, but I also spent 20 years building trading systems, using optimization, automated market making. And I only learned about diamonds because my wife is a diamond dealer and jewelry designer.
Okay.
And I applied that statistical arbitrage technology to diamonds, and we've been awarded numerous patents because it's a lot of computer science breakthroughs that make this possible.
Yeah, I just want to hold one up again. So, I have a lot of gold investors who watch this show. So they might be saying, why would I choose this over a gold bar? Or is it not a question of or and both?
I think both. So in the last 2 years, this has returned 35%. Gold has been flat to down. Diamonds are going through this one-time phase of position building. No investors have diamonds. JP Morgan, BlackRock, PIMCO, they don't own one diamond. They're going to start adding diamonds to their portfolios. That's going to have an impact on price, similar to what you saw with the gold ETFs 20 years ago, and more recently what you saw with uranium. They launched 2 uranium products which financialized uranium.
And is there a story for diamonds? I mean, when we speak about gold in inflationary times, in quantitative easing times, I mean, there's a fundamental story there behind gold. What will move diamond prices?
Diamond prices overwhelmingly are driven by consumer demand for jewelry. And this commodity is a store of wealth, right? If you own diamonds, same as if you own gold, you don't own a liability on somebody else's balance sheet that might go bankrupt, for example. You own the asset. So diamonds provide that store of wealth. They're extremely portable, right? But also they're a hedge and a macro hedge that's actually performed very well. And the other interesting thing which has driven a lot of institutional interest is that diamonds are not correlated to anything else. So you can add them as a diversifier to a lot of portfolios. So I think of it an and, not an or.
An and, not an or. Let's say if I need to get out of the country, go to Europe, and all of a sudden make this into cash. How difficult is that process?
Actually, right now it's very easy. You could do it in about 30 seconds. So we launched the world's first exchange for diamond commodities, which we call the Diamond Standard Spot Market. It's a centralized limited order book, so you have bids and asks, and anybody can trade on that, whether they own a coin or not. They can buy it through the exchange, and they can sell it 5 seconds later.
What's next? What's the next chapter? Where do you want to see the company headed?
Recently we received approval to list futures, which will be listed on the CME Globex in partnership with the MGEX exchange. So futures are a big step because that creates a national market price. We're also working very hard right now on a listed product, which is going to be listed on one of the major exchanges early next year.
I mean, it's definitely an interesting product. I could see myself pulling, the bar out during a dinner table conversation with friends.
Yeah.
What do you want investors to know, I guess, as we wrap here?
Well, diamond commodities are a unique opportunity because, and the investment thesis is very simple. Investors own all precious metals to some degree, and at least 15% is the minimum in general. For diamonds, that's 1% to 2%. So it's a very one-time great opportunity to build a position before diamonds get added to the commodity indices, for example.
How far out is that for you?
It's all dependent on secondary market trading. So my guess is 18 months.
That close?
Yeah.
Wow. Okay. Really interesting stuff. I wish you continued success. I mean, it's definitely an innovative concept, a new asset class to be watching. So thank you, Cormac.
Thank you for covering it. Appreciate it.
Yeah, and thank you all for watching. We hope you found it interesting. We'll have much more great content coming your way. Be sure to stay tuned to the Daniela Cambone Show here on Stansberry Research, and we'll have more great interviews from Boston. Be sure to stay tuned and sign up at danielacambone.com so you can stay on top of it all. Thanks for watching.